Hey guys, if you are a beginner and struggling to find a Forex strategy that actually works, in this video, I will show you the best Forex trading strategy for beginners in 2025-2026. So stick around up the end so that you don't miss anything. So this strategy is for beginners with small accounts and anyone tired of complicated indicators. So all you need is first a Forex broker, a trading view, MT5, and one clean chart without any complicated indicator. Okay, so now you can see this is a trading view I used to make analysis, and this is clean chart. You can see there isn't any indicator. Okay, the rules we shall follow. First, the time frame. We shall use the 1 hour time frame. This is a 1 hour time frame. It is perfect for beginners because it avoids some noise. Okay, and after that, after going to your 1 hour time frame, we shall consider the market direction, which is for buys we shall always look for higher highs and higher lows, and for sellers we shall look for lower highs and the lower lows, right? So now, for example, this is a buying market, right? This is a bullish market, is a buying market. Why? Because you are seeing breaks of market structures. You are seeing higher highs and higher lows. That is a break of market structure to the upside, okay? Because it is a bullish market, that's why you are seeing higher highs and higher lows, guys. Then for the bearish market, of course, you will see lower highs and the lower lows, as you can see here. This is a low. When it is broken, of course, another low is created, okay, making it to be a bearish market, or a market for sellers, guys. Okay, so that is the rule that we shall be considering. So for the entry rule, it is to wait for the price to always pull back, then enter in the direction of the trend. Now, for example, here we shall always first wait for the market to pull back to our zone before we buy or we sell. Okay, so now this is how we shall do it. We shall always first wait for the break of market structure, then we wait for the market to come back to either discount or our premium level, right? So we shall always buy from discount and sell from premium. This is what I mean. So when the market is moving in a bullish direction, when it is breaking highs, right, like this. For what I mean by buying in discount, the market has to come back to it has to come back below our 50 level, 50 fib level, right? It has to be below 50 fib level, or else you'll find that this 50 fib level, it will always be in the middle like this. And when the market comes below that, it is in our discount. And when it is a selling trade, okay, it has to come above our 50 fib level, right? When the market is selling like this, always the market has to come above our 50 fib level before we sell it again. We shall not trade flip zone. We shall not trade support resistance. We shall always wait for the market to always come in either zone, right? For example, now we have example here. This was a bullish trend. So a bullish trend, we identify the break of market structure. Now, for example, this was a break of market structure right here. Always when the market breaks a certain high, we always look for the low. What was the low that made that break? You can see that this was the low that made a break of market structure. That was the low. And after identifying the low, remember, that is the low that made a break of market structure. That means we always expect the market to come to our discount level. And you will see that your discount will actually be below our 50 exponential, our 50 fib level. When the market comes below this line, of course, it will be in our discount level, right? You'll see that it came below that, and when it came below that, we always look for some confirmations. You can see that sometimes we enter on the confirmation, the bullish confirmations of these candlestick patterns. You can see that the first market created this bearish candle, this bearish momentum candle, then it created a bullish inside the candle here, okay, confirming to us that we can enter from that zone. Then you can see after that the market came back and broke again right from here. Okay, when it broke, of course, we first look for the low, we first look for the low that made the break of market structure, and you will find that the low, it was right here. Okay, then you will see that the market pulled back. Always we enter on the pullback. When the market pulls back to either discount or premium, of course we shall be entering from there. And the sample who is trade order blocks, and the sample who trade fair value gaps. You can see that this market actually turned from this order block. So any strategy that you are using, it will work provided you follow this market structure, provided you first wait for the break of market structure, then you wait for the pullback, and you'll see that everything will work at its best. Also, you will see that these people who use trend line strategy, they will also work, because now you can see that was our trend line. Okay, when you draw your trend line here, when you draw on your lows right here, you will see that this was the first touch on the trend line here. This was the first touch, this was the second touch on the trend line. Then sample, they always enter on the third touch of the trend line. So every strategy that you actually are using here, it will work perfect. Sample, they wait for the confirmation on the trend line, then they execute the trade, right? So for the bearish trend, you'll see that it is the same rule that we shall use for the bearish trend. How? I say that we always look at the current market structure. We don't go beyond, because this is a 1 hour time frame. So for the current market structure, you'll see that there was a break of market structure right here. There was a break of market structure right there, and we always look at the lower high that made a break of market structure. This was the lower high right here. Then after identifying your lower high, of course, you can see that the market pulled back. It pulled back all up to our premium. Now that one will be your premium level, right? And in your premium, you'll find zones that people always trade. You'll find an order block zone that people always trade right here. Okay, you'll find an order block zone, right? Then you can see that after that, market came and broke another low right here. Then what we do, we always look for the lower high that made a break. Of course, it is right here, this lower high that made a break of market structure. We always wait for the pullback. We trade a pullback. On the pullback, those people who trade order blocks, there was that order block, okay, that made today break of market structure. So there is that order block. Of course, you can see when the market came back to your order block, you can see the reaction it made. It just sold massively from right there. Okay, so it just sold massively. You can see that when it tapped your order block, you can see the move that it made right there. Okay, so this is the best strategy that you can actually use to trade consistently. Okay, so now for the risk management as a beginner, never risk more than 1 to 2% per trade. This is why most beginners fail. It is not a strategy. It is not the strategy that will fail, but it is your poor risk management. When your risk management is very poor, I'm guaranteeing you that you will lose most of your trades. So the common mistakes that most of you are doing, it is over trading. So you should avoid over trading, and you should avoid moving your stop loss. Now, for example, if you really entering the market, remember you are entering your market, you are entering your buy position from right here. Okay, again, when you have put your stop loss right here, even if the market comes and takes it, because you are seeing the market is coming to your stop loss, don't again move it. Don't move your stop loss, just leave it there. It is either hitting your stop loss or it is either hitting your TP. Just take that. Enter your market. When they enter on the setup, put your stop loss, set your TP, then leave the market to move by itself, whether it takes the stop loss or the TP. So don't do that mistake. Another mistake is trading without confirmation. Some people, they just enter from anywhere. You just come, you just enter the market from anywhere without even waiting for the confirmation. Wait for the market to reach your order block. Okay, if you are trading on the 4 hour, go to 15 minutes for confirmation, then you enter the market. Don't just enter blindly, because you will lose. And lastly, it is chasing trades. Not that every confirmation you've got is genuine. Okay. Sometimes when you lose, okay, it is not good to chase the trade. Okay. Not every trade that you are seeing will give you profits. Sometimes some of them, they are traps. So don't chase trades. So if you want more simple forex strategies for beginners, subscribe to Jim FX. I upload clear, no hype forex education to help beginners trade smart. So thank you for watching. Bye.